Welcome, everyone. Dealing with inheritance tax can be tricky, especially when you've lost a second parent. And that's why we've teamed up with ProTax accountants in the really top-notch here in the UK to bring you this discussion.
Yeah, it's such an emotional time, and the last thing you need is to be wading through all this tax stuff. We really want to break it down for you and make it as clear as possible.
So that's our goal today, to get to the bottom of IHT. Specifically, when the second parent passes away here in the UK, we'll be using all the official guidance from gov.uk and some real-life examples to paint a clearer picture for you. Let's start with the basics. What exactly is inheritance tax?
Okay, so it's basically a tax on the whole shebang, everything someone owns when they die. This includes their property, any savings, investments, even personal belongings. It's like taking stock of everything they had at that point in time.
Right, and I think there's a certain amount you could inherit before this tax kicks in? Right.
Exactly. It's called the nil rate band, or NRB for short. Currently, it's set at £325,000 per person. So in most cases, if the entire estate is valued below this, there's no IHT to pay.
Got it. So if everything adds up to less than £325,000, you're generally good to go. But what happens if it's more?
Then IHT is calculated on whatever's over that £325,000 threshold. The standard rate is 40%. So say an estate is valued at £500,000, the tax would be applied to the £175,000 above the nil rate band.
That makes sense. Now let's talk about married couples and civil partners, especially after the first parent dies. I think that's where things get more interesting for a lot of our listeners.
Absolutely. This is where understanding the spousal exemption is super important. Basically, anything passed between spouses or civil partners is usually completely exempt from IHT. And there's no cap on the value of these transfers as long as the person inheriting is living in the UK, of course.
So if the first parent leaves everything to their partner, there's typically no IHT at that point.
That's right. But here's where it gets even more interesting. Any unused portion of the nil rate ban from the first parent can be transferred to the surviving spouse. It's not automatic, though. You do need to claim it.
So the second parent could potentially have a much bigger tax-free allowance when they pass away.
Exactly. Imagine the first parent didn't use any of their £325,000 allowance because everything went to the surviving spouse under the spousal exemption. The surviving spouse's estate could then have a £650,000 tax-free allowance, their own £325,000, plus the unused £325,000 from their partner.
That's a big deal in terms of how much tax is owed. Can you give us a real-life example to illustrate this?
Sure. Let's say the first parent passes away. Their estate is worth £300,000, and they leave everything to their spouse. No IHT because of the spousal exemption, and importantly, their entire £325,000 allowance is unused. Now, when the second parent dies, their estate is worth, say, £800,000. They've inherited that unused allowance, so their total tax-free amount is £650,000. This means only £150,000. £800,000 minus £650,000 is subject to IHT at 40%, leading to a £60,000 bill. Without that transferred allowance, the bill would have been much higher.
That really highlights the importance of that transferable allowance.
Yeah.
Now, there's also this residence nil rate band, right? It seems to be specifically about the family home.
Yes, that's the RNRB. It was brought in to give you an extra tax-free allowance on your main home. It's currently £175,000 per person.
And who exactly can take advantage of this?
It comes into play when your main home or the proceeds from selling it are passed on to your direct descendants, children, grandchildren, stepchildren, adopted or foster children, that kind of thing.
So the idea is to help families pass down their home without huge tax bills.
Exactly. And like the standard NRB, any unused part of the residence nil rate band from the first parent can be transferred to the surviving spouse. Again, you have to claim it.
So that allowance related to the property could also potentially double.
You got it. Ideally, the surviving spouse could have an extra £350,000 tax-free, specifically for the property, on top of their combined standard nil rate band of £650,000.
That's a big potential saving.
Yeah.
Can you show us how the NRB and the RNRB might work together when the second parent dies?
Let's imagine a couple with a £600,000 house and £400,000 in savings, totaling £1 million. The first parent dies and leaves everything to their spouse. No IHT because of the spousal exemption. When the second parent passes away and leaves everything to their child, the combined NRB could be £650,000, and the combined RNRB could be £350,000. In this scenario, the entire £1 million estate could be completely tax-free.
So in that specific situation, no IHT at all.
That's right, as long as all the conditions are met, of course. But remember, the residence nil rate ban starts to decrease if the estate is valued over £2 million. For every £2 above that, the RNRB goes down by £1.
So the benefit of the RNRB becomes less significant for larger estates.
Exactly. It's good to know that if you're dealing with a higher value estate. Now, to give you some real-world context, some HMRC data from January 2025 for the 2023-2024 tax year shed some light on the situation.
What kind of insights does that data offer?
Well, it shows IHT brought in £7.8 billion from around 28,500 estates. That's a lot, but it's only about 4% of all deaths in the UK that year.
So most estates don't actually end up paying IHT.
You're right. The Office for National Statistics says the average estate value is around £200,000, which is usually below the individual nil rate band of £325,000.
And for those estates that do pay IHT, are those spousal transfers we've been talking about actually making a difference?
The data suggests a big chunk of taxable estates use these transfers to lower or even eliminate IHT, especially after the first spouse dies. That deferral until the second death is pretty common.
What about the residence nil rate band? Are families actually utilizing it?
From what HMRC says, many RNRB claims are for homes between £250,000 and £750,000. So it seems to be helping a good range of homeowners passing their property to their direct descendants, just as planned.
So when the second parent passes away, what actually triggers that IHT assessment?
It's the second parent's death that starts the full IHT assessment on their entire estate. They look at everything they owned at the time of death, valuing it at the market value on that specific date.
And are there any expenses or debts that can reduce the estate's value before calculating the tax?
Absolutely. There are allowable deductions. These usually include outstanding mortgages and reasonable funeral costs. HMRC generally considers £5,000 to £10,000 reasonable for funeral expenses.
Okay, so after valuing the estate and making those deductions, that's when the nil rate bands come in.
Precisely. They'll apply any transferred nil rate band from your deceased spouse, plus any transferred residence nil rate band to the final value of your estate. This helps determine the amount that's actually subject to IHT.
Right. If we go back to that £1.2 million estate we talked about, how would those allowances apply in that case?
Well, you could potentially have a combined nil rate band of £650,000 and a combined residence nil rate band of £350,000, adding up to £1 million tax-free. This would leave £200,000 of the £1.2 million subject to IHT at 40%, which could mean a bill of £80,000.
That's helpful to see how it all fits together. I remember reading about a lower IHT rate if you leave a certain amount to charity.
That's a good point. If your will says 10% or more of your net estate, meaning the total value after debts, but before the residence nil rate band goes to a registered charity, then the IHT rate on the rest can drop from 40% to 36%.
That's quite an incentive to leave something to charity. Any other things our listeners should know about IHT after the second parent dies?
Definitely. Especially if you own a business, look into business relief. It can give you big IHT reductions, even up to 100% on certain trading businesses you've owned for at least 2 years. The rules can be complex, so get expert advice early if it applies to you.
What if one spouse isn't originally from the UK? I imagine that complicates things.
It does. For spouses not domiciled in the UK, there can be limits on the spousal exemption and transferring the nil rate band. Domicile is a tricky area, so definitely get specialized legal and financial advice to figure out your specific situation.
Okay, we've been talking about what happens after the second parent's death. But can the second parent do anything while they're alive to impact the IHT bill?
Yes, absolutely. Things you do while you're alive, like giving gifts, can definitely affect your estate's value when you pass away, and therefore the IHT owed. This is where careful financial planning can be really helpful for you and your family.
So to sum it up, understanding the standard nil rate band, the residence nil rate band, and how they can be transferred between spouses is crucial for figuring out IHT when the second parent dies here in the UK.
Right. You need to know what allowances you have and how they interact, especially with that spousal exemption that often applies when the first parent passes away.
And don't forget, this has just been an overview based on public UK government info and real-world data. If you want specific advice for your own situation, the experts at ProTax Accountant are here to help. They've got the knowledge and experience to give you personalized guidance.
Definitely. Getting that professional advice can make a real difference when planning for these important matters.
Thanks for joining us for this important discussion brought to you by ProTax Accountant.